Hello and welcome from Trend Signal for a review of the data and events this week, starting the 24th of February. A week in which saw certainly the UK FTSE doing particularly well last week, up 150 points. US markets were mixed to lower, in fact. S&P down 2.6 points on the week. The Dow, that was off 50 points, was about 1/3%. Trend in the dollar remains weak, really. The euro rallied another 50 points versus the dollar last week. That's 1/3%. Sterling, that was particularly weak, actually. That came off 128 points versus the dollar, or 0.75%. The yen, that's picked up, or weakened, I should say, 70 points. The actual rate rallying, that's number of yen to the dollar. That's a fall of 0.7%. Gold, well, in common with a lot of other dollar-based commodities, certain precious metals anyway, gold, platinum, silver, palladium. Gold, that was up $4.8, about 0.4%. Crude oil, that continues its march higher. Brent up 80 cents, although the big story remains WTI, where the cold weather is continuing to push prices higher, where we've seen WTI, or US oil, rally nearly $11 since mid-January now. Bond markets, we had the Bund, that's up 30-odd points on the week. Gilts were unchanged, following some mixed data during the week. But generally, last week, as an overview, data was fairly mixed to disappointing, really. We had the Euro flash manufacturing data, which was considerably weaker than consensus, while the services data slightly underwhelmed. US manufacturing data, certainly from the Philly Fed, that was quite a bit weaker than consensus. I think -6.3 versus +9.2. So markets, well, I think the only way you can describe it as resilient. Resilience both in Europe, resilience in the UK and in the US, although the US did slip Friday after we shut. Friday afternoon, evening, which has sort of set the tone this morning following a fairly weak performance in the Far East. As I said, the US dollar remains weak as the trend continues, despite the FOMC minutes last week, where you'd expect it to be a little bit dollar supportive, but that wasn't the case. Thursday morning saw some release of some pretty dire data on the Chinese economy, with the HSBC manufacturing PMI, which came in a lot weaker than expected. Again, the US and European markets rebounded from the earlier weakness on Thursday, which, again, down to resilience, seasonal trends, sentiment, whatever you want to call it. But equity markets do remain pretty strong, and you'd expect them to do so at this time of year. As I said, Brent, in terms of commodities, Brent was the move of WTI. We've already discussed that. Gold really just benefiting from the weakness in the US dollar, pretty much. Data this week, let's have a look at the calendar from Forex Factory. We've already had German IFO business climate out already this morning, better than expected at 111.3, expected 110.7. It is a light calendar this week. We've got data, GDP data updates, certainly from the UK and the US, and also some inflation numbers from the Eurozone, which I think will be quite important. Let's get on to that now. So the first bit of data following today's data that's already been out on German IFO. Tomorrow, Tuesday the 25th, we've got the Conference Board Consumer Confidence number. That's slightly weaker than the print last month of 80.7, but still, nevertheless, the levels are quite high. Then on Wednesday, we have the second estimate of the fourth quarter GDP in the UK, originally printed at +0.7%, expected to be unchanged at +0.7%, although we know that the Bank of England still has a forecast of +0.9, but there is another final number to be published at the end of the day. New home sales in the US, we've got new home sales and existing sales this week. Home sales are important. That number has the ability to move markets as well. That's 3 o'clock on Wednesday afternoon. We then jump to Thursday, where we have the durable goods orders, and it's the core number we're interested in. This is the US durable goods data that comes out at 1:30, same time as the unemployment claims, so both bits of data set released at the same time. Durable goods, we're expecting a slightly better number than the print from the previous month at -1.3. Can be a little bit volatile, and we're still hearing the excuses that it's weather related, but I think that sort of has been factored in now. Nevertheless, looking for a figure of -0.1% on durable goods. We then jump to Friday, which is probably the busiest day of the week for data, really. Very, very important data. We've got the CPI or the flash CPI number from the Eurozone. So this is the first reading on inflation in the Eurozone. I say inflation, the big concern is that it could be deflation at some stage. Plus 0.7%. Prices just aren't picking up in the Eurozone. Companies do not have much pricing power at all. Although Draghi, President of the ECB, seems relatively relaxed about it. It doesn't see deflation as being a problem, but who knows? We have to watch that number fairly closely. So 10 o'clock on Friday morning, I should say. And then we have the prelim GDP data in the US. This, whilst it's called prelim, it's actually the second reading. The first one is the advanced reading. This is called the prelim reading, so it's like our second estimate, as it were, in the UK. So the second reading of GDP, and it's been revised down. I think we all knew that the 3.2 number was a little bit too strong. 2.6 is the estimate, and that comes out at 1:30 on Friday. Then we have our second reading on home sales at 3 o'clock, pending home sales. Again, that has the ability to move markets. That's it pretty much for the week. Good luck. We meet again on Thursday at 8 o'clock. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.